All right, let's talk about the first quarter of 2026, because it wasn't just another 3 months in tech, not by a long shot. It was a period that sent some serious shockwaves through the industry. We're going to break down how the worlds of AI, crypto, and blockchain are finally actually colliding and what that really means for the future.
To really get what happened, you don't need to get lost in, 100 different headlines. The entire story of the quarter really boils down to these four major signals. And what's so fascinating is how they're not separate things. They actually build on top of each other, creating one single powerful story.
So where do we even start this story? Well, it all begins with the foundation. I mean, think about it. You can't build a skyscraper without solid ground and some clear building codes, right? And that's exactly what happened in Q1. The whole industry really started to grow up, and it all kicked off with some clearer rules of the road.
Okay, circle March 17th on your calendar, because that was a huge day. That's when the SEC and the CFTC finally gave everyone some much-needed clarity on their roles. This new guidance answered these questions we've had for years about things like airdrops and staking, and it made it pretty clear that staking rewards from a protocol itself aren't automatically a security. If you're building or investing in the US, this was an absolute game changer. All that fog of uncertainty that was holding things back, it just lifted. We finally got a playbook.
And what happened the second that fog lifted? Yep, the institutional money came roaring back. After kind of sitting on the sidelines for a bit, boom, a net inflow of $458 million in just 1 week in early March. That tells you everything you need to know. The big, cautious investors, they were just waiting for that green light, that signal that it was safe to jump back in.
So while the regulators were putting up guardrails, the developers were busy turning the digital highway into a superhighway. Ethereum got this massive upgrade, all focused on performance. It included stuff like blob scaling. Just think of it like they added a brand new, super cheap cargo lane just for data, and native account abstraction, which is a really fancy term for making your crypto wallet as simple to use as, say, Face ID. The bottom line, the network was getting prepped to handle way more traffic and do it safely and efficiently.
Okay, so we've got a stronger foundation. What's next? Well, this is where the money starts to get real. The whole conversation shifted away from just pure speculation to, practical, real-world financial applications. And the data from Q1, wow, it tells a really powerful story. The volume of transactions for stablecoins, basically the digital dollars of the internet, it just exploded, hitting record highs. This is one of the clearest signals yet that this tech is moving past just trading. It's now being used for real commerce, for real payments, and at a huge scale.
And it's not just about digital dollars either. We also saw this huge rise in what they call tokenized real-world assets, or RWAs. And this is where things get really fascinating, because it's like building a bridge between the old financial world and the new digital one. I mean, just imagine being able to trade a tiny piece of a skyscraper as easily as you trade a stock, anytime, day or night. That's the kind of power we're talking about when you put real assets on the blockchain.
So, what's the big takeaway from all this? Simple. Follow the money. In Q1, the smart investors weren't just chasing hype and stories. Nope, they were focused on the real, tangible stuff. The infrastructure that makes the whole ecosystem run, and the payment systems that are actually generating real, predictable cash flow. That's where the focus was. And that brings us to our third pillar, which, honestly, might be the most exciting one of all. This is the moment AI officially enters the chat. For the very first time, we've got pure, raw computing intelligence that can actually tap into a real, functioning financial system, all by itself.
Up until now, right, we've basically thought of AI as a tool. A really smart tool, sure, like an amazing assistant you can ask to write an email, or crunch some numbers, or make a cool picture. We're the user, and AI is the thing we use.
But in Q1, that whole conversation just flipped. The focus is now on AI as an autonomous agent. So what's the difference? Well, a tool is like a calculator. It doesn't do anything until you tell it to. But an agent is more like a personal financial advisor. You can just give a goal and a budget, and it goes out and does things for you on its own.
And the amount of money flowing into this shift is it's staggering. Gartner's projecting over $2.5 trillion in AI spending this year. To put that in perspective, that is more than the entire economy of most countries on Earth. And almost all that money is going straight into building the hardcore infrastructure needed to make these new autonomous agents a reality.
And this is where everything we've talked about clicks together. Just imagine this. You tell an AI agent, hey, analyze all our shipping data from Q1 and buy enough carbon credits to offset our footprint. What happens next is what's new.
That AI agent can now use the blockchain to prove it is who it says it is, go hire some computing power, pay for that power with a stablecoin, buy the carbon credits from an on-chain market, and then drop the final report on your desk. All of it, completely on its own, with zero human help. That is a massive, massive leap forward.
So we've looked at the individual pieces, right? The rules are getting clearer, the finance is getting real, and the AI is getting autonomous. So now let's step back, connect all those dots, and really look at the huge picture that Q1 started to paint.
So what is the one big idea to take away from all this? It's that these aren't just separate trends happening at the same time. No, it's one big, powerful feedback loop. Think about it. Clearer rules bring in the big money. That money pays to build better infrastructure. That better infrastructure makes real financial applications possible. And those applications become the tools that autonomous AI agents can use to operate in the world. Every single piece fuels the next one.
And all of this leads to one final, really mind-bending question. For all of history, our economies have been built by and for human institutions. Companies, banks, governments. But what we're looking at now is the beginning of an economy where the key players might not be human at all. What does a world actually look like when it's run by autonomous economic AI agents? That is the big question that the first quarter of 2026 has left us all to think about.